Hey traders, Raghee here. Welcome to Charts and Coffee. Happy Wednesday morning, gang. We are just winding down the last few trading days of the year, and everyone's waiting for Santa to arrive. And the 22nd really marked the first day of the Santa rally. You can see it right in there. That would have been last Friday. The last week of the month, after really just an entire month of window dressing, Santa rally is basically that big old exclamation point on the window dressing rally that is December. And Santa's a very specific window. Santa doesn't show up until the 22nd. Likely the smartest window for Santa is Friday to Friday this year, 22nd to 29th. And then we move out to the sort of retail follow through, the not so smart part of the window, which will probably push out till the first options expiration of the new year, January 5. So we do have still a handful of days to go where there could be this bullish follow through. And as we've said in Charts and Coffee now for a long while, strength gets stronger. And I'm not going to say weakness gets weaker. I have not in any way been in the camp of, hey, let's find shorts. Let's find weakness and get long puts or short that particular symbol. When we have December window dressing plus a dovish Federal Reserve, why on earth would I optimize for the smallest and ever receding pool of shorts in an environment that we're going to, as the year ends, and this is the important part, and the timelines, the countdown does matter. As we're going to the end of the year, we're going to continue to play the long side. Now, everyone knows January can be choppy and sometimes downright mean. So at what point does the market wake up and choose violence? Probably going into the middle of January and into February. Some of it's going to be window dressing. Some of it's going to be, or window undressing. Some of it's going to be sector rotation. But it's going to be this year, or this coming year, 2024, punctuated by a Federal Reserve that's going to be cutting rates maybe as soon as March. Why on earth would I want to be bearish into that? Oh, wait. I know why. Because if you turn on the television and if you open any newspaper or website or whatever, disaster's around the corner. Gosh, it's probably the same disaster that's been looming all of 2023, right? I mean, gosh, we're at new highs, but don't forget, gang, there's disaster looming around the corner. And I'm so glad that financial media kept us from being long this awful uptrend, right? Gang, shut that nonsense off. I'd no sooner watch ESPN to learn how to throw a football than I would watching financial media to learn how to trade. So remember, trade what we think. If they trade what we think, not what we see. That's what most retail traders do. Oh, I think this geopolitical skirmish is going to be the reason. I think the Federal Reserve can't do this. Just trade what we see, right? And that means we're not listening to our gut. Pretty sure my intestines don't know the first thing about trading. And we'll just follow the volume. We'll follow the volatility and follow the trend. Heaven forbid. All right. I know I'm coming out swinging. I know this is 2024 Raghee coming out, because I have gotten more emails this year, especially the last 4 to 6 months, of people who said, Rag, how did I miss this rally? And, my answer usually is you weren't listening to Charts and Coffee, and you weren't in the Sector Secrets Mastery, and you were probably listening to somebody who was talking inverted yield curves all year long. So yes, I hate when retail traders lose, because secretly it's us against them, right? And I'm betting on us. I'm betting on you. And that's what I believe we need to do. Just trade what we see, not what we think. And remember, yes, what goes up must come down, but everything doesn't have to be hyperbole, gang. Just because we're pulling back, it doesn't have to be a crash. There's a difference between a crash and a sale. And some traders might say, no way, Rag, a crash is just the best sale ever. That may be true, but if we focus on buy the dip, if we focus on risk management, and if we focus on trends, we'll be all right. I can tell you that much. Okay, so yes, I do want to remind everybody we've got the New Year sale. It's in full swing. Those of you that were asking about the day trading class we did in August, it is in this particular round of sales. Subscriptions, whether that be DPMRs, the daily price movement range, whether that be HPMRs, the hourly price movement range. I tell everyone if you've been wanting to check out one of our services, one of our indicators, one of our subscriptions, do it while they're on sale, right? Because that extra money can land in your trading account. All right, so let's get to it. I don't know why I highlighted that, but this is the kind of stuff you see on my end of the computer screen. Yowza. All right, let's get to it. CHRS. Um, all right, so what do we have here? CHRS. It's a $2 stock, my friend. I'm probably the wrong one to ask when it comes to inexpensive names. Nothing wrong with it, but let me show you what I'll typically do. Here we go. Here's what I typically do with a low cost name. So first of all, let's pull it up on the daily time frame and notice I'm going to head on over to um, here we go. I'm going to head on over to TradingView. Love this platform. All right, daily time frame, TradingView, CHRS. All right. So first of all, I'll be frank, my friend. I know that not the first thing about Coherus Biosciences. It's a penny stock, nothing wrong with that, but it's in a downtrend. So the way in which you're going to ask yourself, right, if I were you, this is what I'd be asking myself. And first of all, let's presume we're thinking long because why short a $2 stock, right? The floor is right there. So if I'm looking long, I want to make sure I'm not alone in this. I want to make sure that I've got some company, that there's some conviction, there's some commitment, there's some attention. Best way to do that? Price-based volume. And you'll see here on the volume profile, if I go back to about mid-year, it's sitting at about $2. If I go back for the entire year, it's sitting at about $2. If I go to basically this quarter, there it is, point of control sitting at about $2. So now I know where the attention is. If $2 can hold, and then now remember, something like this, all it needs a little bit of news, and all it needs is a little bit of help, but you need to know the floor first. I won't look at a $2 stock. That's not my jam. But whether it's a $2 stock, $20 stock, $200 stock, this kind of volume profile analysis is going to help. We can never be alone in our trades, right? I know we celebrate that. The person who picked the top, the person who picked the bottom, right? We celebrate that one time. But gang, that's not a career. That's not a career at all. So what we want to do is make sure that if there's a trend that's going to emerge, if there's going to be movement to the upside, we got to find the floor. And that's where I'd start. All right. Okay. Thanks for the question. Let's see. Is the Richmond, oh, hey there, Jack. Richmond Manufacturing Index. Yeah, we don't have a lot of hot zones this week to speak of. And for those of you who don't know what a hot zone is, it's a high impact scheduled, typically high volatility event. Let's jump on over to our calendar. And on Wednesday, you can see here 10 a.m. Richmond, lacking anything else, Jack, the way I look at the Richmond Manufacturing Index, it's not a choice. It's a lack of options. And you're right. Those kind of hot zones we would normally overlook will probably get a disproportionate amount of attention because there's just nothing else happening. So 10 a.m. we do have this event. And remember, it's not even really a hot zone, right? Why did I coin these things hot zones? Well, first of all, we got to know they're coming. And they've got to be a high impact. And normally if they're a high impact, there's a little red icon here, right? And if that little red icon is there, I shut my camera off. Oh, I don't know what happened. Yeah. Hey, dude. Yeah, you gotta calm down, Mr. I love you. Yeah, you need to seek some help. All right. I don't know why the camera went off, gang. Anyway, I'll just kill this. All right, here we go. So if I'm looking at this Richmond Fed at 10 a.m., what we got to do is remember that as we emerge from the clearing, the first 30 minutes after the bell, the idea here is that we could have a bit of volatility in the aftermath of that hot zone. And If there's timing for a day trade, that could be a catalyst. So we'll use it. We'll definitely use that to our advantage. So Jack, yeah, thank you. All right, moving on to Apple, Google, Microsoft, Meta were lower while NQ is at an all-time high. Who leads? I never think about leading and lagging. I really don't. However, I get the gist of your question. How on earth is the NASDAQ moving higher, right? How on earth is the NASDAQ moving higher if some of these core names are not moving higher? But remember, the Magnificent Seven all have significant weighting via semiconductors, technology, communications, and consumer discretionary. Semiconductors were in fuego yesterday, and that put one of the Magnificents, NVIDIA, in terms of stocks helping the NAS move higher. That sure did help, right? So yes, yesterday was odd, Ken. I completely agree that we saw so few of the high concentration weighted names moving higher, but there were a handful of them. There were a handful of them. You know, NVIDIA had a pretty decent session. Take a look here. Amazon, not so much, right? Meta, you can see here, not so much. It closed lower than it opened. Microsoft, again. Now, what about names like Google? Google, not so great, right? What about, let's go further down the food chain. What about names like AMD, right? Huge day. So you can see where the strength is coming from. Look at Intel, huge day. So most of that was the SMH. Most of that was more the semiconductor weighting. And it wasn't as if Microsoft, Apple, Google, Meta, absolutely correct. It wasn't like they were selling off broadly. They were just not making much headway. So as long as they're treading water and you've got strength in semiconductors, it's enough to let the NAS go higher. All right. And you've got semiconductors. Well, by the way, let's back up a minute before we start saying, oh, well, what was the news? Let's remember something else, gang. Semiconductors are the #1 performing sector, period, when we take a look at the different sectors that give the NAS an assist. Okay. All right. Moving on. Let's see here. Is this pre-recorded? Next question. Would like to hear your thoughts on Goldman? Bank earnings will be coming. Yes, great question. All right. Goldman. So we have XLF, those high concentration weighted names in Goldman Sachs. They're going to be a big part of why, when we get into earnings season, XLF can move. And remember, where does this land? S&P and Dow. Now, Goldman Sachs is moving higher. In fact, a lot of the names in the XLF have been really strong. Yeah, have been really strong. And really the only, if you want to call it laggard in the XLF, is the #1 weighted stock, and that's Berkshire. Now, Berkshire is a different kind of quote unquote stock, right? When it comes to its weighting in XLF, because it's not a company as much as it is a bunch of companies. Nonetheless, it's moving sideways, which doesn't undo the relative strength of JP Morgan, Visa, MasterCard, Bank of America, Wells Fargo, SPGI, Goldman, Morgan, BlackRock, and Citi, right? So my thoughts on Goldman would be the same as all of those sans Berkshire. Kirthi? Yeah. And that means that if I can buy the dip in the 642 window leading into earnings, that is absolutely one of the types of swings that I would like to put to work. Now, some of you might say, okay, Rog, what the heck is a 642 window? If you Google Countdown Trader 642, and it'd be nice if I typed it in right. If you type in Countdown Trader 642, you will get, so go to Google, Countdown Trader 642, Raghee 642 earnings window. The Trish Boss has posted this over there. We have a couple different updates on this strategy, which is just more detail and, what's a hot zone? How do we look at the 6, the 4, the 2? What does that mean? When I talk about a window, how do we optimize our buying options without stepping into the increasing implied volatility that makes the likelihood of vol crush more significant? How do we avoid vol crush? All those things are there. So check that out. And then currently, yeah, I would focus on two kinds of swings. Either the kind of swing that would allow you to take advantage of the Santa rally. XLF is an outperformer. Take advantage of the Santa rally into the end of this year. Maybe take advantage of the small retail window that overlaps into 2024. I would take that to the Jan 5 options expiration. Or if you have a bigger budget and you don't mind the bigger window until, what was it, Jan 12, right? Is when Goldman, and we have two major windows for financials, Jan 12 and Jan 16, I believe. So yeah, if you go out to that window, you'll spend a little more because you can go out to the Jan 12 or Jan 19 expiration. But if you have the budget, we're in good shape. All right. Okay. What else do we have here? Riot, please. Sure. Look, I'll be frank. This has not been where a lot of my attention has been. I know there's a lot of names that have been moving higher with Bitcoin, whether that be Coin, Riot, etc. It's in an uptrend. December's been good to it. It's north of the 200, Nadeem. I don't want to short it. I'm not here to say, let's pick a top. I don't hate my money. I don't hate yours. So if we have a trend now and we're above the 200, look for a mean reversion, whatever your preferred mean reversion is. Some folks like a gap close. Some folks like a pullback to a certain moving average. I prefer the 34 EMA wave on the high, the close, the low. It could be a Darvis level. It could be a retracement of some sort. So there's a lot of things you can do. Let's say, for example, you wanted to go the retracement route, and you're looking at Pingala, right? We go from minor low to minor high. If that indeed is the high, right, then you could start looking at pullbacks maybe to $16, things of that nature before you buy either the stock or get long calls. Yeah, so that's what I'd focus on there. All right. So let's see, what else do we have? Oh, you know what? Sorry, Munair, I missed your CEG. All right, CEG. We are looking at it's not in an uptrend, is it? So of all the things I could focus on, my friend, this time of year, I don't know that prioritizing or even focusing on a stock that is not moving higher, and then remember this, I know you know this, but for folks who don't know, this is an energy name. This is an XLU name. So in an environment where there's generally risk appetite, do I want to focus on a corner of equities that is generally perceived to be defensive? Do I want to focus on a corner of the market? This is where CEG resides in the XLU group. Do I want to focus on something that's not in an uptrend, not above the 200? Those are things that are going to matter a lot. If I look at where we are in relation to the beginning of the year, I'm not even positive on the year. So those are things, those are reasons that'll keep me away from CEG. And then ultimately, what I want to remember is it may not be the time now, Munair, but keep an eye on XLU, keep an eye on things like NEE, Duke, Southern. And if those start to move, CEG could follow suit. But just be careful going into what could be a fairly dovish central bank that's going to help equities rally. And that's going to point traders towards risk appetite stocks. So things like XLP, XLU, XLRE, until we have, frankly, a little bit of fear in the market, or we end up with our everything rallies market, I don't know that's where my focus would be, and I don't know what CEG would be it. So let's wait for some uptrends in that corner of equities, and let's see if we actually get some moves into. Look for flows, Munair. Look for flows into XLU, and I would focus on DUK. All right, I would focus on DUK. All right, Meta, buy the dip. Prakash, buy the dip. Yeah, I would see that. I would definitely focus on a buy the dip. Wait for the daily price movement range. Maybe surf the wave on the 1 hour. It depends on your time horizon, but most definitely buy the dip. All right, that is a wrap, gang. I will see you all tomorrow, same time, same station. All right, until then, gang, be good to each other.